So I'm going to go over how to play reverse splits. It's going to apply for penny stocks and small caps that are commonly doing offerings. So this is a real good site called splithistory.com. There, you could type in any symbol and it will tell you when they did reverse splits in the past and how many. It also tells you the latest stock split, so you could continuously do this strategy, which I've done in the past very successfully. So CYCC is my example today, because this is the perfect example of how to play these. Minding, not all of these are going to pan out and do this exactly, which we'll go over later, but this is the most common way these work. So look, it announces a reverse split 4:15 and does it on 4:15 at 1 for 20. So we go look at the price. As always, they announced it the 4:15, which is rare. It actually opened up the next day higher, which isn't that commonly. This wouldn't go up. It would be a straight dip from the day they announced it. But there must have been some speculation or some hype on it. So it actually went up that day, but then look, next day. And then the next day. So if you did a 20 for 1, a 1 for 20 reverse split, you got to figure it was only what? At 40 cents, right? So it bleeds to 427, and this is what they always do. So here it comes on April 17th. On April 20th, it spikes from 627 to 864, and that's just where it closed at. It would have hit higher in the intraday, and the reason for that is after they do the reverse splits, the float's real small. And the company will almost 60-70% of the time come out with a PR. So for this one, they came out and they dropped this. On April 19th, CYCC entered into a MTA with the University of Edinburgh. So pretty much they came out with news, knowing that their float's smaller. And sure enough, it jumps up 620. It jumps up about $2 plus, maybe even $3 in the intraday. So there's two ways to play it so far. The reverse split, you short it or you buy puts. It's gonna bleed, but you gotta be careful. Knowing news could come any days, and you do not want to get squeezed. And here's the safer way: is you wait, you wait for the very bottom. You scale in here. Maybe you start scaling on this day at 680, knowing you're only going in like a third of the way, and you catch the bottom this day, knowing whenever that first green day comes, it's going to be pretty nice. That is that oversold. But then right after that news, this is what they always do. This is the most important part. They drop that news. They jump their price to 864. Then bam, they drop an offering, right? So they almost pump their price on purpose to do an offering. This one was an example where you could have been on top of it, because look, you see an S1 the same day they announced the reverse split. So if you were diligently going through the SEC filings, you would see. And you'd be very scared to hold this overnight. So then they do the offering, and check it out. It goes from $8 to $4 overnight. And the reason for that is, I should have showed you guys. Check this out. So they did the offering on the 21st. The next morning, so anyone that held overnight or in the 8s or the 9s or whatever it hit got killed. Because look, they do an offering at these prices. So it closes all the way down to 4:15, and if you guys have seen my video, that's why when I did my video. So this is another way. So after it spikes that first time, there's another short position. So short from the announcement of the reverse split, long on that first news days. You catch the top and look for that sign of weakness, and then you wait for that offering short. And then from there is my favorite type, because now you got a lower float, and on this situation, that offering wasn't that big, and since you know it just happened, you're not that scared to hold for a few days. You know another one's not going to hit. So that's why I did my video on the 21st, the day, that night of the offering. And I shot my price targets at, I don't have them, but $4, $5. I'm pretty much, my price targets is pretty much in that gap from the pump to the next offering. What the offering caused. See right here? And this is where it failed, right up here. See, all of them's going to take longer. This one actually took a long time. Quite often it will be maybe a week or so. This one took a month. But yeah, that's how I play reverse splits, and you could apply this to any pretty much stock that's doing them. It's all going to change. It's not an exact science, but you short on the announcement of the reverse split. It bleeds. You try to catch the bottom. You wait for that first green day or the news, and then you short the top of that to the bottom because you expect an offering from the company. And what you will see from time to time is these companies are stupid sometimes, and after they do these reverse splits and they have the low float, they'll just do an offering with no news, so they won't even pump the price up. So it will just be constant blood. And then in that case, it will eventually recover maybe, but I hate those companies. So look for the reverse split, the pump and PR, followed by the offering the next day, or the same day sometimes when they're really ruthless, followed by a huge gap down to the near the price of the offering. And then the situations I like the most is when the price settles way below the offering. So someone just recently with big money and an institution is buying shares at a higher price than you can. That's my favorite setup personally. And that's when I'd load right here in this 4, and I'd still use risk management obviously. But see, it holds the 4, consolidates, boom. Eventually works up to 580, almost 50%. Yeah, those are my favorite plays on a reverse split.